Hello family. Today in this video I'm going to show you how powerful that data collection is and how you can use it to your advantage when calculating your risk to reward and just pretty much being mindful of what's a realistic take profit at your next level. So without further ado, let's go ahead and get started. So data collection is basically, we're going to go back 8 days and so we're going to see what the market has given us pip wise. Now when you're trading indices, there's going to be a difference in how you calculate these pips. So on indices like NAS, for example, the easiest way that I can possibly show you is you take the ruler here in your trading view account and you draw from wick to wick in the direction of the market. So if you're buying, you're going to start at the bottom and then you're going to draw up or whatever using the ruler. So for example, on day 8, I'm going to go back 8 days, 1 2 3 4 5 6 7 8. How do I know that this is day 8? Let me put this here. The reason why is because I have it set as on daily time frame for my candles, and I'm going to go ahead and start my first draw from this candle, wick to wick, open to close. And you just, when you look at this box, you're going to stop at the top. The way you read this is the 3,568. That number on the right on indices, you always drop the last digit. So your total pips for the day is 356. Or you can use the number on the left, and what you're going to do is use all the numbers before the decimal place. At the very bottom where it says volume 414.12K tells you how many transactions have been placed that day on this pair. Okay, and so what you're gonna do is you're gonna take a piece of paper, and you're gonna put day 1 on that paper. And what you're gonna do is you're gonna write 356. Actually, I am on the wrong day. I think I did the wrong candle, or maybe not. So wick to wick. Okay, that's about right. Now, if you want to get precise, because I highly recommend you just do like a estimate. But if you want to get precise, you can drop 2 lines, 2 horizontal lines, and drag the ruler from line to line, and that'll put you where you need to be. So 364. So day 1, 364, right? I don't need to be that precise. I just want an average. That's all you're going to be taking. So write 364 on day 1. And then on day 2, we're going to go with 380. Okay. Day 3, we're going to go with about 180. I'm rounding up for that one. Day 4, we're going to go with, bring this down, $288. So 1 2 3 4. Day 5, 258. Here's day 6 for you, about 330. Day 7, about 90. And then day 8, we have about 209. Okay, so before we continue, let me show you what it looked like on a normal pair. So we're just going to use EU. And the way you calculate the pips on a normal pair, so say I'm going to use this candle for example. I'm going to draw the ruler up from wick to wick. And as you can see, this has this box shows 164.8 on the right. It didn't say 1,648 pips. So on this one, you just take everything before the decimal on the right hand side. The volume was 380.12 1.15K. That's how many transactions was taking place on this given day. So 164 pips was traded total in this day. On this next day, which is November 25th, only about 80 pips was traded for the entire day. So that's the difference between indices and regular Forex pairs. Now that we have a total pip for the last 8 days on NAS, what we're going to do is take our calculator and we're going to take the average of all these pips. So I said on day 1 it was 364 plus 380 plus 180 plus 288 plus 258 plus 330. Okay, we're going to keep going. 90 and 209. So we averaged in 8 days about 2,099 pips, okay? All 8 days. So now, well, we had a total, we had a total, not an average. To get the average, you're going to divide this total number by 8, the amount of days that you just used. So we're going to go divide it by 8, and that's going to give us about 262. So how do we use this number? What this is saying, like, if I'm going to take a trade on NAS, it would be more likely that I'm going to get 262 pips on the trade minimum, and based on the amount of volume that has been trading in the last week and a week in 1 day. So you're going to do the same thing you normally do with your trading plan. You're going to mark up your zones. I use supply and demand, so this is going to be my daily zone of interest right here, and then I'll drop down to 4 hour, try to get a little closer to current market. And if I'm looking for a setup, for example, based on current market, you're still going to identify your resistance areas. So there's a nice little supply zone right here. See, market rejected there. And so where market took off to get up here, let's go to the 15 and see if I can see an opportunity. Okay, here we go, right here. So you have this impulse leg from this support and this support area. I'm gonna use this red box. I'm gonna use my red box strategy. Okay, so this area is where I would be looking to take a buy if and when market comes back, okay? Why? Because this is the impulse leg that broke above all of this, and this was the last candle that helped push this up. So it's more than likely realistic that the market will come down here for a buy. I'm gonna go ahead and get my long position tool from TradingView right here. I have it saved in my favorites. I'm gonna go ahead and mark this zone as my point of interest. Put my stop loss below this low right here, okay? And then I am gonna drag my target to 262, because that is my total. So notice the target goes up and down, up and down. Now on the target, it's gonna be like normal regular pairs when you're adding your pips. So it's not like the ruler where it had over, for this particular one, let me see how it says 545 pips. Drop the last digit on indices, or read the number to the left, and it's your pips, everything before the decimal. So this is 54 pips in this one candle, just so you know. So this is going to be different than using this tool. So for this one, I'm going to drag up to 262 all the way up here. Look left. Still, you're going to still use structure, FYI. You're still going to look left to make sure I'm not running into a big resistance zone, or is this a realistic area, a target area. So for this, my next zone is up here on a 1 hour time frame. Let me use this blue box for now. Let me go up real quick. Okay, yeah, that's the top of this consolidation area right here. Okay, so is it realistic that the market can give me 262 and take out this high? Yes, it very much is realistic. So one of the things you can do to monitor your trade is set alerts. So when this market gets here, you can set alert and see what it's doing, if it's resisting or is it breaking through or violating that zone. So the way I would look at this with the data is like I'm risking 43 pips to make a total of 262 pips total. My risk to reward is amazing. I'm quadrupling pretty much my risk to make a bigger profit. And so it's 6.0, which is really good on this trade. And honestly, I would definitely take this. And so let me just look at this. That's a tight stop loss. There's a possibility I could get kicked out the trade. Okay, that's fine. Just get back in based on market structure. So this might come back down here a little bit below and fill this imbalance. Looked like it was already filled. I'm sorry, I was looking at some other stuff. But that's pretty much how you use data based on the past to help plan future trades, to help you with your risk to reward ratio, to see if it's realistic or not to go for 262 based on structure. Okay, I can't sit here and just be like, oh, let me go ahead and go for 400 pips on NOS when on average the market has been giving me 262. Yeah, there were some days that it gave me 364 and 380, but those were days where it was probably news or something that was influencing the transactions. So that's how you use data collection. I hope this helped in your trading, and you can use the same thing on all the pairs, all markets, all time frames. Just start with the daily to get the total number for that day. Go back 8 days, divide it by 8, that total number after you add them all up, and just use that to help you with your take profit. Okay, I got this. I learned this data collection from Mamba Forex. He's an awesome trader, and now I'm showing you how to do the same. Good luck, happy trading. Until next time, stay tuned.